Thank you so much for joining us today for our COVID-19 and Your Business webinar that's being presented by Cowan Insurance. My name is Allison Mitchell and I am part of the Greater Kitchener-Waterloo Chamber of Commerce team. Before we start our webinar, there are a few housekeeping items that I'd like to share. This webinar is scheduled for 1 hour today. Your microphones should be muted at this point, but if you could please double check to ensure that they are muted to reduce the background noise, that would be great. Please feel free to ask any questions throughout the webinar, and to do so, you will see a questions box. If you could type your questions into that box, they will be answered by our presenters at the end of the webinar. And all webinar registrants will be sent a recording of the webinar after this event in a follow-up email. I would now like to invite Adam Diamond, who is the Director, Small Segment National Benefits Consulting from Cowan Insurance Group, to begin the presentation.
Thank you. I'd like to start off by thanking everybody for investing your time with us today as we navigate these uncertain and unprecedented times together. It really is a testament to the strength of leadership of the Greater Kitchener-Waterloo business leaders that everybody's making time for this important topic. Our presentation today will hopefully answer a number of your most pressing concerns. We have assembled a panel of experts from the Cowan teams focused on supporting you with your business insurance, employee benefits, retirement plan needs, individual insurance, and your own personal wealth needs. Today, we will share with you the most common topics and concerns of our clients have been bringing to us or asking us about every day. We could not be prouder to be part of such a tremendous group of leaders and a great community. We're all in this together. Please let us know how Cowan can help. With that, I'm going to turn things over to Nick Goodfellow, one of our small segment, small business solution sales consultants in the commercial insurance. We'll then hear from Julie Brisson, principal consultant of our group benefits and retirement area, Tracy Spark from our Cowan Infinite team, and Rob Salvucci, our vice president of wealth management. So without further ado, I will leave you with Nick Goodfellow to talk to you about commercial insurance and how you should be protecting your business through the pandemic planning. Thank you.
Perfect. Thanks, Adam. So the way I've kind of set this up to kind of give everyone a bit of insight into the whole commercial insurance and the COVID response is I think the easiest way to do it is to kind of discuss the biggest question, right? And the biggest question is really business interruption. So the easiest way to kind of talk about business interruption is to make sure everyone's on the same page. So I put a few definitions here, and then as we go through, I'll kind of discuss how it goes. So most policies will have a profits form, and what profits form is it pays for a reduction in gross profits caused by physical damage or destruction by an insured peril. The key in all of these you'll see is it's physical damage or destruction by an insured peril. So extra expense, again, extra expense pays for increased costs during a period that profits would respond to. Again, physical damage or destruction. Again, an example during this time would be increased cleaning. Civil authority, again, this provides limited coverage. It's usually 2 weeks or a 30-day period of business interruption when you are unable to access your business property due to an order by civil authority as it relates to a neighboring premise and physical damage or destruction by a third party. Think a fire happens at the far end of your building and you can't get into the building because of smoke damage, something like that affects your unit, not directly, but they have to do something there. Contingent business interruption, this pays again for the reduction in gross profits caused by physical damage or destruction by an insured peril to a supplier or recipient. Think your main supplier of a key raw material is no longer able to supply you with that raw material because of fire, or a main customer, again, not able to purchase yours anymore because they are unable to continue to operate due to an insured peril. So that kind of gets us all onto the same page. And now we're going to look at how we kind of go navigate from there. So as I've kind of tried to highlight, insurance as a whole is designed for physical damage or destruction of insured property. This is kind of the crux of the whole COVID-19 thing. So the question, right, is COVID-19 an insured peril? Is it causing physical damage to tangible property, and kind of how that looks, right? So there's two types of property forms. There's a broad form, which is you also hear it referred to as an all perils, all risk policy, and then a named perils form. So a broad form covers everything subject to exclusions. Named perils covers specific perils. So clearly a named perils form would not name pandemic, COVID-19, anything like that. The broad form is where we kind of get into the question of what exclusions will apply. But right now, what we're really seeing is we're seeing a lot of legal proceedings discussing this. Right now, the easy way to think of it is COVID-19 is not causing physical damage or destruction to any of your property. Insurance companies are considering it not an insured peril, and therefore there's kind of legal proceedings taking us from there. So we see new lawsuits weekly where different businesses are taking different insurance companies to court just to see what the courts believe is true physical damage. We saw a court case, I think it was on the 1st of April, that the Ontario Supreme Court is ruling that COVID-19 is potentially a physical damage, and therefore it's going to be causing physical damage, which should, in theory, trigger business interruption. We haven't seen any insurance companies respond to this ruling yet, and I think that has to do with the fact that there's going to be continuous legal proceedings around that. And then the second part is that we're seeing U.S. legislation. So in certain states, they're basically forcing insurance companies to provide coverage for this, saying that COVID-19 should be considered a covered peril, and therefore business interruption should respond. So right now, kind of where we're at is that COVID-19, as it relates to business interruption, there's limited coverage and it may apply, but 100% depends on your insurance provider, so who you're actually insured with, and what their specific wording says and what exclusions they plan to apply. As things kind of progress, I think this is a big question, and as more court cases and as more legal kind of proceedings happen, we'll kind of go from there. So business interruption is definitely the hot topic in terms of business insurance, but there's definitely other areas that will respond. So let's kind of jump into those ones now. So the other business insurance is definitely a lot nicer than business interruption, right? And in the insurance world, we like to say things are covered, so it's tough to provide that messaging that business interruption is likely not going to respond at this point in time. But general liability, again, here are some definitions, and I'll just kind of give some examples of how potentially COVID-19 claims may respond and may happen. So general liability provides coverage for bodily injury or property damage to a third party, right? So if the big word here for general liability is if someone was to get sick in your place of business and somehow they were determined that it was your place of business that got them sick, there is potential damages associated with bodily injury. The whole thing about general liability is it's legal liability as well. So the courts would have to find your business negligent in the event that you did something wrong or you were the one who in fact got someone hurt. So that's an important fact, that though lawsuits may come out, there may be no legal standing for them in courts. So on to the next one, and I think that the next two we're really going to see a fair amount of coverage here. So directors and officers. So this protects the personal assets of directors and officers in the event they are personally sued for the actual or alleged wrongful acts in the management of a company. So so think about a board of directors, officers within a business, right? Shareholders and stakeholders may accuse the board or its officers of not being prepared and not taking the proper precautions in the event of a few things, right? So if they're not prepared and something happens drastically in terms of bankruptcy, if they don't see the return that they were expecting for one reason or another, that would all be directors and officers. So there's definitely clear coverage there. How much an organization is prepared for COVID, I think it's a big part of everything that's going on. The next is employment practices liability. So this is liability as it relates to employment practices, obviously. But this is with the mass layoffs and the terminations and all those types of things that we're seeing right now. There's potential that lawsuits may arise from that fact. So that's an important piece to remember, that that if you don't have employment practices liability in place, that you may be seeing an increased number of lawsuits, just given the fact that there are a lot of temporary layoffs and things like that. If you do everything right, they still can happen, right? So the next one is professional liability and errors and omissions. High level, this provides coverage for financial harm to third parties. Where we could see potential claims here, again, these are all covered claims, which is really nice, is potentially delay in delivery, right, or breach of contract, those types of things, given the fact that you have a remote workforce, you still need to deliver on your timelines. So that is definitely a piece of it. And it kind of falls into cyber insurance as well. So cyber insurance, right, with the fact that everyone's gone from in the office traditionally, where you have a secure network and everything is very well controlled, right? You have proper policies for internet access, you have proper shredding protocols, you have all those kind of things in place to protect privacy of individuals. Now you have your endpoints kind of scattered across the city, across the country in some cases. So you have to remember that you may see, we are seeing an increase in phishing attacks, but also potential malicious software, just the fact that you have employees on their home networks, which may not stand up to your in-office infrastructure. So yeah, so then lastly, I just want to chat about kind of what you need to do now, right? So obviously I went really quickly through kind of the different areas. So what should my business do is the question, right? So Cowan's position is really that everyone should be submitting a claim because every day something's changing, right? We saw a lawsuit or a kind of a court ruling on April 1st that said one thing that differs from everything we've been talking about in the past in terms of if COVID-19 is considered a physical damage or destruction. So if you have experienced a loss in revenue, we recommend that you submit a claim. Claims may be denied and this may change, right? The hope is that it will change, or there's something that happens. In the past experiences and other similar kind of catastrophes, think Alberta wildfires in Fort McMurray or Alberta floods, a lot of government aid was only triggered if you got a denial from your insurance company. So that, on top of the fact that things are changing, is a good reason to submit a claim. So next part is when to talk to your insurance broker. Obviously, to submit a claim, you should probably chat with your insurance provider before you submit a claim, because they'll also provide their guidance and their opinion based on your specific situation. But on top of that, so change in operation. We're seeing lots of really good news stories of companies that are now going into the manufacturing of PPEs, protective equipment, and that changes a lot of things in an insurance policy, especially on the liability side. So if you are manufacturing one thing and you're being a good Samaritan and looking at manufacturing protective equipment, you should discuss that with your insurance provider, because that does change what you're doing. Reduction in revenues. So we are seeing some of our carriers assist businesses with their insurance premiums if they're seeing a reduction in revenue, and many of them are also assisting with payment. So if you need to push your payments or defer a payment, there are a lot of options out there right now, and carriers are being as helpful as they possibly can be. And lastly, the thing that you should talk to your insurance provider about is if you are going to shut down, vacate, or unoccupy your premise. Most insurance policies have terms and conditions that require regular check-ins. And each carrier is treating it a little bit differently. So you do want to make sure that if anything's changed in that aspect, you talk to your insurance provider. And lastly, do not cancel your insurance policies. This is really important. If you plan to come out of it, we really don't want people canceling their insurance policies for two reasons. Insurance policies have long tails, so your product's liability. If you sold a product last year, but someone doesn't get hurt by your product until 2, 3, 4 months from now, and you cancel your policy, your business is on the hook. And again, same idea, completed operations is the same idea. If you're a contractor, you installed the deck spring or summer 2019, and it collapses in summer of 2020, and you did not have insurance at the time of the collapse, you would not have any coverage, even though you've been paying your insurance premiums this whole time. And the second point is there's going to be a big change after all this is kind of said and done. And the questions will arise about why you canceled and why you did all these things, and saving money in the short term may actually cost you in the long term. So again, our recommendation is if you plan to operate after the fact, don't cancel your insurance policy now. Work with the deferred payments and everything that the carriers are offering.
All right, thank you, Nick. I know that a lot of people have a ton of questions about how COVID-19 impacts their business insurance. Hopefully that gives you a little bit of an overview of some of the questions we're seeing and that Nick's getting on a day-to-day basis. By all means, reach out to your Cowan expert if you have some more questions. We are going to open the webinar for a Q&A at the end, but out of respect for everybody who may want to get to one of the topics to come, we are going to hold all the questions till the end. Please submit them into the chat box and we will get them in order at the end. Or feel free to reach out to us. We're also going to list everybody's contact information after the webinar. With that being said, Julie Brisson is calling in from our Ottawa office to talk to you about how COVID-19 has changed your group benefits and group retirement plans and how you can manage some employee expectations and some of the changes as they happen in real time with your employees. So with that, I will turn it over to Julie. Thank you.
Thank you, Adam. So in the essence of time, I'm just going to jump right into it. Now, of course, this is an ever-changing world, and we've been receiving lots of updates every day. So in the essence of time for this presentation, we decided to focus on two specific area of group benefits. So I'll do some clarification around short-term disability and some updates on out-of-country coverages. So I'll move on to the next slide. Before starting about details about short-term disability, I wanted to take a moment just to review what the purpose of a short-term disability coverage is, mainly what it's for and what it is not for. So the purpose of any disability insurance is to replace a plan member's income when they are too ill to work or unable to perform their regular occupation. Now, normally, in normal circumstances, there is a formal process in place to apply for a disability claim that would include an attending physician statement. And it's a form that needs to be completed by the plan member's family or treating physician. Now, all insurance carriers are conscious that we are living through extraordinary times, and they have collectively agreed to waive the requirement to submit an attending physician statement for the cases where an employee has received a positive COVID-19 test results. So collectively as an industry, they have created a shortened version form called confirmation of illness form, and it's what will be used in the interim. Now, let's review three scenarios to clarify what would be considered a short-term disability claim and what would not. So if your benefit program offers short-term disability coverage and you have an employee that has tested positive for COVID-19 and cannot perform the duties of their job, they would be eligible for payment. Most carriers will pay short-term disability benefits for a period of at least 14 days, and they will also waive the normal waiting period that most STD plans may have. If you are not sure what the waiting period in your short-term disability contract is, please consult your benefit booklets. Most plans have a 0-day accident and a 0-day hospitalization waiting period, but the number of days for illness may vary under each plan. And the illness waiting period that would normally apply is the waiting period being waived at this time by insurance carriers. It's also important to know the difference so that if you have an employee who has or is experiencing flu-like illness symptoms but has not been tested or does not have a positive test results for COVID-19, they are not eligible for having the waiting period waived, and the carriers will continue to adjudicate these claims based on the definition of total disability under your own contract. Also important to clarify that having an employee who is being asked to self-quarantine by a doctor or a public health office, but that does not have signs of COVID-19 or has not tested positive is not considered a short-term disability claim situation at this time. Now, in these situations, alternative arrangements should be made, such as working from home where possible, or applying for employment insurance if the employee's occupation does not permit him or her to be working from home, as well as other recently announced government programs that may be available. Okay, so moving on to the out of country coverage that is covered under the extended healthcare portion of your benefit plan. There's been multiple communication, and some may have been interpreted in different ways. So I wanted to just do like a quick recap on what has not changed. And it's important to know that the definitions have not changed. So the definition of what is considered an emergency and an emergency services have not changed. On the slides, I've included the Sun Life Financial definition they are using. All carriers have their own definition, but they are all pretty similar in nature. So that's important to know. That I wanted to clarify, but I also wanted to focus on some of the things that have been communicated and that have changed. So most carriers over the last a little bit more than 48 hours have communicated that they will be waiving their trip duration limit until at least April 30th, 2020. And some have even communicated that they will be waiving it until the end of June. You should check with your respective carriers or contact your Cowan consultant. If you have an employee that is currently stranded outside of Canada and is unable to get home, and that is also approaching their trip duration limit, you should check to make sure what applies to your specific contract. Trip duration limit may differ depending on your contract, but usually range from anywhere from 60 days to 120 days. It's also important to know that if you have an employee who left the country on or after March 13 and are now unable to come back within their trip duration limit, this extension may not apply to this individual. March 13th is the date when the government updated the pandemic status to level 3, and therefore Canadians were advised that all non-essential travel was strongly not recommended. And some other insurers, such as Sun Life, have indicated they will be using the date of March 18, which is the date that the Government of Canada announced that the borders were closing for all non-essential travel. Travelers at this time are all aware, or at least should be made aware, that this is no time to travel. And we, of course, encourage all our clients to remind their employees. If you are in a situation where you have an employee who traveled between February 1st and March 12th and have found themselves stranded and unable to come back because of borders closing, that they may be able to claim unplanned expenses under their plan. We absolutely encourage all who are in that situation to contact their respective out-of-country travel provider or their Cowan consultant in order to get more information regarding that. So information regarding out-of-country travel can also be found on your member's travel card at the plan member carrier site or through respective carrier mobile app. And again, this is an ever-changing situation, and all carriers are doing their best to adapt, but this is certainly one that we're keeping a close eye on as things evolve. There are some exceptions that I wanted to point out. So, of course, there are circumstances where you may have employees that are required to leave the country or cross the borders for essential travels. Example of these exceptions would include truckers and airline employees. I've also added on the slides here a link to the government travel advisory site for your references. And also wanted to point out that if you are in a situation where you laid off employees or will have to lay off employees and are wondering which options are available in regards of continuation of coverage, please contact us and we will be able to provide you with specific option based on your own plan contract. The second thing I wanted to touch quickly on is that it's an ever-changing situation. Government and insurance carriers are adapting every day, every hour of every day. Yesterday, the government of Ontario has announced 12 million funding initiative in regards of virtual mental health care, and there'll be more details communicated over the next coming days. But during these times of isolation, it's important to be keeping your team connected and informed and making sure they are adapting well to this new reality. Many physicians have adapted quickly to and are now seeing their patient through virtual consult. There are multiple options available and options out there. If you are wondering if one option would be, which option would be best for your employees, please contact us and we would be happy to help you navigate through it all. So I'm going to move on to the group retirement part of the presentation. So we've been in touch with our clients through emails and phone calls and video chat, lots of video chat over the last 3 weeks, and wanted to specifically address the top 4 frequently asked questions that we've received from our clients in order to offer you some clarity. Also, for the purpose of this presentation and in the essence of the time, we will specifically touch Group RSP and a question on the PSP plan. If you are offering a registered pension plan and have specific questions regarding your plan, we encourage you to reach out to one of our group retirement consultants who will be able to answer specific questions in regards of your RPP. So the first question is, so as an employer, we sponsor a group RSP to which we also contribute. Can we temporarily stop our contribution? So of course, this takes in consideration that your employees are still actively working and receiving a salary, of course, if they are still making contribution. And it's also important to remember that contribution made by employees via payroll deduction and any contribution that you as the employer decides to make is part of the employment contract and part of the employee's overall compensation. Any changes to this term would need to be decided between the employer and the employer and agreed upon. So I guess the short version of this answer would be no, not at this time if the employee is still actively contributing to his plan and that you are also making contribution. The second question we've received a lot that's really relevant to these times we're living in is, as an employer, can we waive the suspension period for an employee who needs to withdraw a portion of their funds? Now, okay, so here we are speaking in regards of a group RSP, and the suspension rule is established by the employer. And just to clarify, the suspension rule normally applies to future employer contribution made on behalf of the employee in the event an employee would have withdraw all or a portion of his savings while actively still employed. These rules are put in place to encourage long-term savings for retirement and discourage an employee from using his group RSP savings for short-term projects or for short-term goals. Exception for the suspension of contribution always includes the first time doing a withdrawal for the first time home buyers program and the lifelong learning programs. Those would be 2 exceptions. where the suspension of contribution would not apply? So the answer here is yes. So as the employer, given these unprecedented times we are living in, you could decide that you will be waiving the suspension period if any employee needs to have access to their accumulated savings due to financial hardship. They may still be employed but have a spouse who has lost their employment, or they may be on reduced hours or laid off temporarily and need access to additional funds in order to make ends meet. If you are going to do this, we would recommend that technically waiving the suspension of contribution period be done temporarily, and that a time frame be properly communicated. Please do not hesitate to reach out to your group retirement consultant, as they can help review your different options and scenarios regarding this. Two more questions before I pass the mic to my colleague Tracy. Similar to the previous question, as an employer, we were asked, can we waive the no withdrawal rule while employed rule temporarily for Group RSP? So again, as the employer, you established the rules regarding withdrawal. Therefore, the answer here is yes, the rule can be waived. And similar to the suspension of contribution, we would encourage you to apply a clear time frame if you choose to do this. And we would also encourage you to make sure it is communicated properly, and in a way employees understand that this should be a last resort. They will be taxed on any withdrawals they make from a registered plan, as the amount will be added as earned income and will have an impact on the tax they owe at the end of the year. The last question I wanted to address, a question we've received and we've had conversation with regarding a deferred profit sharing plan. So if you are offering a deferred profit sharing plan, you are in a situation where you're offering a DPSP plan, and the rules of the plan provide that you must make a contribution if the employee contributes to the RRSP. Can you stop contribution even if the employee continues to contribute to the RSP? So no, you cannot, given that company contribution must continue in accordance with the plan text. Of course, here we would be talking about a situation where your employee is still contributing to his RSP through payroll deduction. Therefore, we are assuming that they are most probably still actively working and receiving a salary. Now, for the in the essence of time, I'll just skip the next 3 slides that I have and pass the mic to Tracy.
Okay, with Tracy coming online, representing our Cowan Infinite Private Client Risk Management. Cowan Infinite is our private offering that provides individuals and their families bespoke solutions for personal insurance, wealth, and asset management. Tracy and Rob are going to speak to both of these areas. The Cowan Infinite team services accomplished individuals and business owners whose needs go beyond the traditional home auto insurance solution and estate planning. Tracy is going to speak a little bit about the group home and auto plans that everybody as part of the Kitchener-Waterloo Chamber has access to, but her focus is also going to be largely on yourselves as the owners and the business leaders in the community. So without further ado, Tracy Spark from our Cowan Infinite team.
Thanks, Adam. Thank you so much. So certainly during this time, individuals are experiencing new personal challenges. More families working from home, sharing the internet, sharing same space, lots of time together, and of course the stress of the unknown. People are and will continue over the short term be faced with making some difficult decisions. So we want to share some personal strategies and tips during these unprecedented times. So let's just skip to personal security tips. If you're working from home, so next slide, please. If you're working from home, watch out for online scams, including phishing, malicious acts. Only share social posts with family and friends. Follow password best practices. So this is use strong passwords. Never share your passwords. Don't reuse passwords and change them regularly. Use software, update your software and systems. Monitor kids, especially now, for online activity and signs of cyberbullying. Turn off your devices when not in use and during private discussions. Install anti-software software. antivirus software on your devices, and secure your Wi-Fi. When securing your Wi-Fi to your home network, make sure it's secure and password protected. Consider changing passwords and update default settings. So with regards to home security tips, with regards to unoccupied properties, especially now, ensure someone checks into your property regularly. Have newspapers and flyers removed. Turn on lights, use a timer, shut off your water to avoid any risk of burst pipes or water issues. Secure your vehicles, put them in the garage if at all possible. Turn on your home security system and store all key fobs away from entryways and doors. For your property insurance, next slide please. If you have a mortgage and you're considering canceling your insurance, you may have a legal obligation to keep that policy in force. So rather than canceling, consider increasing your property deductible. This will help reduce your insurance premium. Installation of a home security device will also lead to further discounts. So in addition to not only providing you peace of mind, you get the benefit of the added home discount. Talk to your insurance broker about other potential discounts, water mitigation devices such as shut-off valves, sump pumps, and water backup valves. For your auto insurance, working from home could mean you might be eligible now for adjusting your commuting distance on your car insurance. If you've thought about taking your car off the road, consider maintaining comprehensive coverage only or suspending coverage. That will still give you a savings in your premium, but it'll still give you minimum coverages such as fire and theft. Take advantage of group home and auto programs that you may be eligible for through the Chamber program. Your broker is here to help. So if you feel you may have issues making your next payment, talk to your insurance broker about your payment options. Talk to us about potential discounts, water mitigation devices, winter tire discounts, sump pumps, water backup valves, and take advantage of the group programs because they do give you a discounted rate on your home and auto insurance. We understand these are challenging times. Please know that our team is here to help you. Thank you.
Thank you, Tracy. And with that, we're going to hand things over to Rob Salvucci, our Vice President of Wealth Management, to talk about COVID-19 and the markets, how to protect your investments and stay on track for the long term.
Thanks, Adam, and good afternoon, everyone. What I wanted to do today, and we'll try to get through this as quick as we can, but just in these unprecedented times, obviously there's been a lot of market volatility, a lot of concern about personal investing and even protection at the personal level. So what I'm going to do is share with you sort of our top questions that we're receiving on a daily basis. As many of the other speakers have indicated, things are changing rapidly and companies are responding quickly with different programs, et cetera. So it's important to stay on top of the issues as they evolve. So with that, we'll go to our first question. The markets have crashed. Are my investments in trouble? And the reality is most people's portfolios, I'm sure, are down in value significantly. But a reminder that if you've got a properly diversified portfolio, we certainly expect that it will regain its value as markets eventually rebound over the mid to long term. So again, certainly short-term volatility, you don't want necessarily dictate your behavior in the short term that could throw your long-term plans offline. So again, if you have questions, certainly talk to your financial advisor and have them provide you with a more detailed analysis of your specific portfolio. Next question. Have the markets hit bottom? Obviously, there's no way to know that with certainty until it's in the rearview mirror. We do expect volatility to continue during this period of uncertainty. And again, the bottom won't become evident until a sustained rally has occurred. So nobody has the crystal ball on that. Will the markets ever come back? And if so, when? And again, this kind of an easy and tough question at the same time. Although every crisis feels unique and more serious in the moment, we know that markets have historically always rebounded to ultimately reach new levels. And although we don't know when that will happen exactly, we fully expect that over the mid to long term, again, markets will once again rebound to and ultimately surpass pre-COVID-19 levels. Next question, how do the current market conditions affect my retirement plan? Well, again, depending on your the specifics of your particular situation, you could be at any one end of the spectrum. It could be anywhere from being totally fine and with nominal impact to the other end of the spectrum where you could be facing some serious challenges. The reality is most people will end up somewhere between there. And once again, we strongly recommend that you sit down with your financial advisor so that they can provide an updated plan to help illustrate the impact to your personal situation. Next question, I may need to make withdrawals from my investments. Which account should I withdraw from? Again, you need to be very careful here and try and anticipate the need for withdrawals as far in advance as possible. Any unplanned or increased withdrawals ideally should be made from the most liquid, least volatile, and most tax efficient accounts wherever possible. Once again, our recommendation is to discuss these potential needs as far in advance as possible with your financial advisor so they can help you determine the best approach for your situation. Next question, if I'm already taking regular withdrawals from my portfolio, should I reduce the withdrawals if possible? The answer is yes. Certainly, if you've got the flexibility to reduce withdrawals that you're taking currently, then that can only help protect the long-term value of your portfolio. So we would recommend that where feasible, but again, consult your financial advisor who can help identify the impact to your personal situation. Should I move my investments to cash until the markets get back to normal to prevent further declines? This is probably one of the biggest questions we get on a more regular basis. And again, excuse me, our general recommendation is to not make rash decisions about your long-term investment objectives based on short-term market volatility. So again, unless there are extenuating circumstances that you're facing, as a rule, people should not be moving to cash. When people do that, what typically happens is you actually crystallize what would otherwise be a paper loss. So in other words, the value of your holdings might be lower today based on lower market values, but if they're held over the long term, again, the expectation is most of them will rebound. If you sell today, you're now crystallizing that loss, and we see a lot of people that do go to cash sit out too long. They wait until the markets fully rebound and shown a lot of momentum, and then they're buying back in at higher levels. So really doing the opposite of what the old adage is. Instead of buying low, selling high, people are selling low and buying high. So really should avoid that wherever possible. And again, if you have any questions, consult your advisor to make sure that you're not making any decisions you might later regret. Should I be making any changes to my portfolio? That's a very good question as well. From the standpoint, or most people these days have very well diversified risk-adjusted portfolios that are designed to meet your specific needs. The only typical recommendation we would make in the short term, assuming your long-term objectives have not changed, would be to rebalance to your target asset allocation. Depending on the type of investment you have, that may or may not happen automatically. If it does, then you don't need to worry about it. It's being done behind the scenes for you. But if not, you may want to, again, have your advisor look at that and help you make any necessary changes. Should I even be investing into the markets under the current circumstances? Well, our recommendation there is ideally you should be making regular, consistent contributions to your portfolio at all times through good and bad markets. If in today's environment you do have some extra money available to invest for mid to long-term objectives, then today's depressed market values could present a really good buying opportunity. But again, as I noted earlier, we feel there is still significant downside risk. But again, if you're taking a long-term vision, clearly there could be a buying opportunity now. And once again, consult your advisor to help discuss any potential opportunities. Now we'll switch gears a little bit more to the protection side of our business. First question here, will life insurance or will my life insurance policy pay if I die as a result of COVID-19? And the answer is yes. At this point, we're not aware of any life insurance policies that contain pandemic exclusions, but in the same time, we recommend that you review the specific terms of your policies with your advisor just to be 100% sure. Next question, can I still purchase life insurance at this time or is it too late? And the answer is yes. The insurance companies are still in business and are still taking new applicants. They have implemented a new COVID-19 screening process that has to be completed prior to submitting an application. But again, it's not that onerous and it's more around the 14-day travel and isolation periods. Most companies now also offer digital application and payment processes, so it's easier to do on a remote basis. And once again, if you feel you need some additional protection or want to talk about that, please consult your financial advisor and they can help you determine the right course of action. Are life insurance companies allowing clients to defer premium payments? As we mentioned at the onset, the environment's changing quickly. As of yesterday, the answer was no. As of today, the answer is some companies are now offering temporary payment deferral programs, but they're launching them on an individual exception basis only. So in other words, individuals seeking relief would have to make a formal request and provide proof of financial hardship that comes as a direct result of COVID-19. So depending on your situation, you may or may not apply for that. Alternatively, some policies have cash values. In those instances, you may be able to use some of those values to cover premiums for a period of time. Otherwise, if you don't fit into either of those categories, the reality is you'll likely have to continue to make your premium payments to avoid lapsing the coverage. Once again, consult your advisor and they can help identify any options that are available to you. Next question, my life insurance policy has cash values. Can I make withdrawals if I need the money? Well, as we just mentioned, yes, in some cases, depending on the type of policy, the contractual terms, and current values within those contracts, you may be able to withdraw funds. There are different methods of accessing those values that have different tax and policy implications. So again, you want to make sure that you discuss that as far in advance as possible with your financial advisor so that you can help make an informed decision and again, not create any negative surprises for the future. Next question, will my disability insurance policy cover loss of work due to COVID-19? Again, individual disability policies typically provide income benefits for people who become totally disabled for an extended period of time due to an accident or sickness subject to a specified waiting period. And on the individual contract side, we typically see waiting periods that range in the 90 to 100 day range. As a result, we expect that most insureds who contract COVID will not be off work long enough to be able to claim under these policies. And it's important to note that these policies do not cover loss of work due to layoff or forced closure, or in other words, business interruption needs. So again, if you're uncertain, please ask your financial advisor to review the terms of your specific policy. Okay, last question, I believe. Will my critical illness policy pay a benefit if I contract COVID-19? At this point, we're not aware of any critical illness policies that provide pandemic coverage as one of the covered conditions. So again, ask you if you have any questions or uncertainty, speak to your financial advisor to review the terms of your specific contract. And with that, I'll turn things back to Adam.
Thank you, Rob. I think that if there is any takeaway, it's that when it comes to matters of estate planning, insurance, or managing your private wealth, the best thing you can do is talk to an advisor. If you don't have an advisor, if you're having a hard time finding your advisor, or if you just like a second opinion, the Cowan Infinite team is still up and running at full steam, even though we're getting used to this new remote workplace, but we'd love to be able to help. So if you have any questions, feel free to track Rob down after the webinar, and we would love to get you in touch with an advisor. So with that, we are going to go to our questions that have come out from the crowd during the presentation. First couple were that we were having issues with audio. So a question that we received from Vaishali Patel, thank you, Vaishali, is we're considered an essential service and we are open with reduced hours. Can we still call our insurance for reduction in revenue? So I'm going to pass that over to Nick Goodfellow for business interruption insurance. Nick?
Yeah, so a lot of the companies that are looking at reduced revenue, they're looking at it on an annual basis. So month to month, they're really not, but they're looking on it at a 3-month, 6-month kind of timeline, just because it's so unknown right now in terms of how long this is going to last and what the lasting impact is. There's a lot of businesses that are seasonal, so they're not impacted right now, but it doesn't mean they're not going to be impacted in the future. And again, a lot of businesses can work overtime to make up for lost revenue. If you think about accountants, lawyers, and things like that, if they're shut down momentarily, they'll likely put in longer hours down the line. So they look at it as a whole, on a whole basis. But in terms of deferred payments and stuff like that, you can definitely take advantage of that right now.
Excellent. Thanks, Nick. That was the only question waiting for me in the inbox there. Are there any other questions while we have everybody available? With respect to your time, if anybody has to go, we really, really appreciate you joining us today. We hope that we've answered some of your questions. I've put today's presenters up on screen so that you can follow up with any questions. We also have an active website. If you want to download a copy of today's presentations, review the slides on your own, look up the speakers and get any more information, we have a website open at covid19.cowangroup.ca. Please feel free to find it there. The Kitchener-Waterloo Chamber of Commerce will also be posting the recorded version of the full webinar in its entirety on their website following the completion of the webinar. So with that, are there any final questions before we sign off and buy you back 10 minutes in your afternoon?
So Adam, I think we are good. I just wanted to say thank you on behalf of the Greater Kitchener-Waterloo Chamber of Commerce to you, Nick, Julie, Tracy, and Rob for being with us today. We appreciate you sharing your expertise to help our business community through this difficult time. To the attendees, thank you so much for your time today. We appreciate it. And as Adam said, we will be sending out a link to this webinar recording in a follow-up email. I wish everybody a great day and a great weekend. Thank you.
Thank you so much. Have a great weekend.